Nobody, nobody submitted, but there's no issue about that. So today, like I said, we'll be talking more. We'll dive back into technical analysis very well, whereby we're talking about we've talked about support and resistance as well as demand and supply. You understand? We've talked about what's it called? Talked about the candlesticks. But today we'll be talking about the Japanese candlestick, the chart pattern, trend lines, and channel. You understand? And after this, we pick a trade and analyze the little things we know. So those are the things we're going to do today. You understand? We talk about the trend lines and channel, the chart patterns, though we did more of the chart pattern yesterday, using the law of demand and supply, and to show you how these chart patterns were being gotten from the law of demand and supply. And that was what I was telling you guys. Anything you're doing, know that law, the three laws, at least. Know those laws. So now, so at the end of the day, we'll talk about the trading psychology and the emotional discipline as well. So for now, let us start with what? Let's start with the sub. Let's start with the trend lines and channel. What do I mean by a trend line? Now, basically, when we're talking about trend line, I hope you guys can see my chart. Now, just as the way we talked about the support and resistance yesterday, you know, we said this in such a way that probably this is support and this is resistance, you know. It's more or less like the market is oscillating in an horizontal, you understand? And since the price of the market was obeying it horizontally, moving from here, moving from here to here, down here, down here, respecting it like this, respecting like this, respecting like this. In short, I'm not saying that it's respecting it in a horizontal manner. Do you understand? So now that doesn't mean you can't have your support and resistance too in a slanting manner. Let me use the word slanting. In a slanting manner. Do you understand that? Now let me explain what I mean. Let me admit this person. Okay. So that doesn't mean you can't have this thing in a slanting manner. You understand? So for instance, now let me try and pick. Now I can say this is an example of what? An example of a trend line. You understand? Now there are differences between trend lines and channels. They are more or less like the same thing. But I will explain to you when they call something channel and when they call it a trend line. But basically, psychologically, they mean the same thing. You understand? Now, if you look at the psychological meaning of this support and resistance, they are saying that if the price of the market was going up and it touched this particular level or zone, there will be a change in direction, right? So with that, we're able to predict that the next time the price of the market should hit either of this zone here or this 1 year, it will pay a change in direction. Why? Because in the past, it has already like hit those zones, and we've seen how they respected those zones. You understand, in the past. So same thing applicable to here too. So same thing applicable to this of a thing. When you notice it, you've seen that it has actually been respected twice before. You understand? So this is what you call a trend line. You understand? You know, I say they'll give you every different kind of name, but at the end of the day, what you should understand is the psychological meaning and the usefulness behind all these things. Now, if you notice, at least So now when you want to draw your trend line, for those that already know about this trend line, don't frustrate trend lines. Don't never frustrate trend lines. And the question is, can I draw my trend line on any time frame? Yes. Any time frame you are using, anything you are seeing. If you spot anything that at least maybe the market is oscillating in a pattern that is predictable, draw your trend line. You understand? That will make the market to be easier for you. You understand? This was the same V25 we're using to practice yesterday, but we didn't actually draw the trend line because we are not there. Now, if you look at something like this now, drawing this trend line now, drawing this trend line, if you recall yesterday when we had the class, we talked about the third law of demand and supply, and we talked about the first breakout. Now, do you notice that now there's already a breakout at this trend line now? Now we can say these are bluish, we can say these are our resistance, these are our supports, right? Because when the price of the market in this particular zone, it was a push up, it came back to the zone, it was a push up. You understand? But yeah, right here now, it came back here and broke it bluishly and fell in back already. So this was what we discussed yesterday. For those that you don't understand what I'm saying, that's probably because you've not watched yesterday's video. So but yesterday's video has been pinned on the group. So you can just watch it as well before we drop this one in the midnight. So that for better understanding. So now you see that this was the first breakout, total first breakout. And remember what we talked about that when there's the first breakout, what was going to happen? Do you understand? Remember what we said about it? So definitely that was what happened. It changed direction. You understand? After the breaking out, it came for the retest, proper retest, and now it's going to sell. Do you understand? Now this is a 24 hours time frame. But I have the knowledge of all these things because I know the law. And when I know the law of demand and supply, I basically know the movement of the market. So when I know the movement of the market, the only thing I'm left with is how to enter, when to enter. Do you understand? Because another thing that you know that something is going to sell. You understand? Another thing you know the particular time you should sell it. Do you understand? Now they say the price of a stock, maybe pure water is going to rise up. You don't know when it's right for you to buy. Maybe for you to buy at 10 naira, or you don't know if you're still going to come down to 5 naira before it's going to buy. Do you understand? So basically, that's what I mean. You have to know the right price, right time to buy, and the right time to sell. So I hope you got this. Now, let me tell you the difference between now the trend line and the channel. Now, we consider a line, the trend line, when it's just one, like when it's just representing like it's just a normal push shot from how will I say this thing? Like you know this is the demand and supply now, this is the support and resistance. You understand? But the fact that it's coming up, it's actually bouncing, ranging, oscillating in a particular manner. You understand? You can call it. I want to explain in an easier way. Okay. Now you call it a trend line, probably if there's nothing really interesting at the upper place that is okay. Let me say now. Okay, let me say. Let me say this way. I don't want to make it hard. Now, the price of the market is oscillating in this channel. It's oscillating in this pattern. You understand that it's been enclosed or more or less like it was trapped inside this thing now. You call this channel. You understand? Because already like it's enclosed. Do you understand? But the fact that, and the reason why it is enclosed is that we saw that the price of the market respected it twice. And after eating it, at least there was a for long, at least we knew there was a change in direction. You understand? Around those times. So what if it didn't actually touch it, didn't respect it? Probably this particular one was above. You understand what I'm saying? And probably we're not able to get a good drawing or a good clicking. What are we going to say? We call this one a trend line because it has no upper body. And same thing applicable to it as well. If it was just only up the upper one and the lower one was not picking, because when you are drawing this trend line, like I said, don't force draw it, but just make sure that it's picking at least two. You understand? That is, the price has touched it twice before you can call it your verified. You can make it a verified trend line. You understand? Before you can make it a verified trend line. Now, imagine now In this part now, they already know my. So that's the difference between the channel and the trend line. Did you get it? The fact that it is two lines is called a channel. But the fact that, and the main reason why it's two lines is because it has something that is touching twice. It has something that's touching twice. But assuming it was not touching this thing twice, definitely this upper one is scrap. You understand? So when you're drawing a trend line, you don't first draw one. Secondly, make sure it's touching 2 points. You understand? That is, the price has touched it twice before you can actually now say, okay, this trend line or this channel is what is doing well. You understand? So now, as you can see, talking about the third law of demand and supply, or the first breakout around this place, then it came in. You already know. You already know the law. You know, I definitely just tell you that the breakage, it was not meant to be this. This was just the liquidity manipulation, first breakouts to liquidate people from the market. Instead, it's breaking down, it's coming down bearishly. Do you understand? And after breaking down, we talked about what? Retesting, which is what? The first law. Now, basically, all the basic thing that happened there is the what? Third law and what? Third law and third law and second law. Do you understand? Because the first law just says that it has to what? Obey the zones. The second law says that it's going to obey, but if it's break, it's going to make a retest before continuing that direction. Where the third law says that there's always a first breakout, and after the first breakout, it breaks in the opposite direction of the first breakout before it starts selling or buying, depending on the direction it broke the zone. You understand what I'm trying to say? So now, in this case now, practically, you can draw your trend line. You can see most of the things now that is actually even useful in the market is trend line. People will tell you that I can't believe you are predicting the market to the trend line. No, don't mind them. Now, can you see now? I want to predict this particular one, the trend line. Or let's just say with a channel or trend line, either of anything. Like I said, it's more like the same thing. So can you see? This is more or less like the third law as well, because it already touched it twice. 1, 2, 1, 2. So this down trend line and this upper trend line are very, very good. You understand? So definitely what actually happened there was a first breakout. So definitely you see what happened here. He's just trying to tell us that the price of the market as well is going to break out this bearishly. You understand what I'm trying to say? That's definitely what he's trying to tell us. But the fact that I know that, okay, fine, it's going to sell now, that doesn't mean that I should click on sell instantly now. Understand? Because I'm sure you don't want to sell at a premium price. We'll still get to that as well. You want to sell at a premium price. Do you get what I'm trying to say? So that's a trend line, and that's how to draw a trend line. And yes, you can spot your trend line where anywhere, any time frame. Because now, if I switch to a lower time frame now, because okay, fine, let's focus on this. We already know that there was a first breakout and there was a retest. Then the next thing is for the market to move now. Yeah? So now we want to join the sell. We don't want to join now because we know that the price of the market is going to retrace. So let's switch to a lower time frame. Maybe of something of 2 hours. And after switching to a lower time frame, this is what we have. Okay, this is more or less like we are creating already. Let me talk about the chart pattern as well. Now, another thing I should explain now. If you really want to know, for instance, now, okay, let me switch to one out. This basic thing that was happening in the market now is called choppy market. But people will tell you that when you say choppy market, you should run away. But as a trader, and like I said, I'll be putting light to every dark areas in the forex market. Now, when you say choppy market, you don't run away. I will tell you don't run away. If you don't understand, you can run away. But if you know what you are doing, you don't run away. You understand? Because now, if the market is consolidating, you understand? It's just trying to tell you some basic things in price delivery. You understand? And price delivery says those. You have consolidation, you have manipulation, And after the manipulation, we have the expansion. You understand? What am I trying to say? What I'm just trying to say is in the context of the third law. That is, the market is actually ranging from a particular price to a particular price. You understand? And the next thing you should be expecting is manipulation. And after the manipulation, you understand, which is like more or less like the first breakup, you should know that the price of the market wants to move in the opposite direction. Now, what's actually happening here is what the market price of the market, the price of the market are consolidating in this enclosed distance. So let us try and close them now. After enclosing them now, I sort of oscillating from around this particular place to this particular place. But now that's consolidation, price delivery number one, consolidation. Now you see what happened there? Manipulation, first breakout. You understand? Because it's just a lot of time for you understand this thing very well. So what are we expecting now? The expansion, bearishly. Another thing I can use as a confirmation that is ready to sell is that I can cite what? I can cite my what's it called? Internal order block. So the price reach the internal order block before it starts selling. Don't worry, you'll get to that point. You understand? When the signal was to join the sell V25. Do you understand? So now, without wasting much of our time, let's go to what. So now, let me tell you the market structures. Yeah, before we go to chart patterns now. Now, we have three types of the market structure or the market. Yeah, let me use market structure. Now we have the uptrend, downtrend, and what the choppy. So we have four. Sorry, we have the uptrend. Let me put all this into the right things, just the way I did last time. We have the uptrend, downtrend, ranging, and choppy. Now, what do I mean by the uptrend? And let me make this big. So now, what do I mean by the uptrend? Now, if you look at the markets now, you understand. For instance, this market now. What can we call this kind of market? This market started here. Okay. This market started here now. For instance, started here. This is higher time. Let's go to higher time frame to see the trend of the markets. Because for instance, now if I'm saying what is the trend of dollar against naira, what we call it? We call it an uptrend movement. Because what we can say is that the price is rising every day. Starting from 350, 500, 700 to 800 to 150 to 2000. And in as much as it went back to 800, you understand? It's still going to be an uptrend because the starting point that we knew was what around when the $1 was still like 150. So now what I'm just trying to say now is like now look at this market now. It started here. This is the starting point. And now this is where the price of the market is. So definitely the market is still up. The market is what's climbing up. So this is an uptrend market. You understand? This is what uptrend market. Now let's for another pair. So I think V251S is a downtrend market. Yeah. If you look at this particular market now, started here. This is not the time, but I'm just using it as an example. Started here, ended here. So definitely, if you want to know this thing, you can just say this is the starting point, and you take it to the ending point. So you can see that it's falling. So this is what an example of a downtrend market. You understand what I'm saying? Now, zooming very well. Okay. So now let me ask you a question now. They might ask you or you might see it like I was saying, this should be another topic entirely. Okay. After this, we'll just go to let us talk about this. Talk about the validation of uptrend, downtrends. The chart patterns and data candlesticks. Okay, those will be the two topics we'll talk about after this. So now we have to pay attention to this one I want to talk about now. Like it's very, very important. It's actually like a basic that people don't really concentrate on. But tell me when I tell you it's very, very more important when you are dealing with what? Dealing inside the zone. Like validation of uptrend or downtrend, you understand, is fucking underrated. And they are very, very powerful. Now, without wasting much of our time now, let me practicalize. Now, this market was coming like this, came like this, it's going like this, like this, like this. And right here, stop gate. This is an example of uptrend or downtrend. The market started at 0 and now it's at 5. Is that an example of uptrend market or downtrend market? Please can somebody answer me? Uptrend. Can anybody answer me there? Hello?
It's an uptrend.
Yeah, fine. It's an uptrend market. Because what? This is the starting point. This is the ending point. Now, we are now asking the validation that was an uptrend. Psychologically, you can just think that, okay, because the price went up, you understand? That's a layman language, you understand? Which is very, very correct as well. But there's more to it. You tell them that the validation of an uptrend market is the what? Is the creation of higher highs and what? Higher lows. You understand what I say? The creation of higher highs and what? Higher, higher low. What I mean by that, I was put out my higher highs and higher lows now. Yeah. I was put out my higher highs and my higher lows now. Why the validation of lower high downtrend is what? Is the creation of lower high and lower low. You can put that down. I know we've not talked about ranging market and we've not talked about the choppy market. But for now, they tell you when you see a choppy market, you what? You run. So just take it like that for now. When you see a choppy market, you run. But at the time, as the class advances, every area that you're telling you that you should run from, I'll tell you there's no necessity for you to run from it if you know what you are doing. So that's why you are here. You know the secrets, the dark areas, area in the. So now, this is about uptrend, right? You understand? So the price of the market is an uptrend. It creates what? Higher high and higher low. Let me put that down. Like normal higher high, higher low. So let me put that down. Creation of higher high. Can denote our higher high as HH. And our higher low as as HL. You understand? The creation of higher highs and higher low. Like I said, let's denote our HH. Why our HL. So now, this is the new higher high. This one is the new higher high. Where it's coming from is the higher low. The new higher low will be where? Creation of higher highs and higher lows. This will be another higher low. This will be what? Another higher low. This will be what? Another higher high. This will be what? Another higher high. So that's the creation of they're asking a question. So, Mr. Man, we know you are a trader, but how do you know the price of the market is in an uptrend. Don't tell them that because it is falling down. Everybody know when you spot it normally, you know that okay, this market is falling. But as a professional, as a trader by profession, you tell them, oh, that's the creation of higher highs and higher lows. You understand? Because now this is the uptrend. Now the creation of higher highs and higher lows, the variation that the price of the market was is an uptrend. Now let's go for an example of the market is actually falling down. Now let me try and zoom this. This thing is very underrated though, but I will explain all the dark areas now. Okay. Now, just like how I told you to give me this assignment, yesterday assignment, I'll be giving another assignment again. Understand? Based on this thing, using all these things, because this is actually movement as well. You understand? So you use the third law, the three laws of demand and supply, or the four laws of demand and supply, alongside with this uptrend and downtrend or something. I'll give you an example of what I'm saying, and I'll give you an assignment. Just draw freely anything that comes from your mind. Draw it, sketch a chart on the piece of paper, and make sure that those charts are respecting the first law, second law, third law, and fourth law in validation to uptrend, downtrend, choppy, or ranging. Now, if this is the price of the market is in a downtrend, right? Now, the validation of this is no more higher highs and higher lows. You understand? The validation now is lower high and what? Because the market is going lower, is lower end. It will be lower high and what? Lower high and what? No. Lower high and what? Lower low.
Lower low.
You understand? Now we are using higher high and higher low for uptrend because the market is going higher, 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 higher. You understand? So the next thing, the high and low beside this are something that is very constant. You understand? But the particular reason why we are using higher for it, both of them, is because the price of the market is going higher. Now, the price of the market is coming lower. You understand? So it will change from that higher to lower. You understand? So now, normally this is the high, so it will be lower high. Okay, let me find. Let us label lower high. It will be a lower high. Come on. And lower low. Creation of a new what? A new lower high and a new lower low. Do you understand? So this is the creation of what? Of a down trend market. Are you getting me? So these are the validation. Now, let me tell you why all these things now comes into practice. Is that if the market is in an uptrend, it doesn't mean it's calendar sell. But how do you now know that the price of the market is ready to sell? That is if the validation of the higher high and higher low. For instance, maybe the price of the market was buying before. You understand? So how do you know if the market is ready to sell? Without using an indicator, without even using demand and supply, without using all these things, you understand? You have to use your demand and supply, but even though you don't want to use your demand and supply, you understand? You can basically know because of the law, or should I say formula, of the validation of the uptrend. They say the validation is Because you know the market is an option. If it's creating higher high and what? Higher low. So definitely the price of the market is not creating higher high again. You understand? And not creating a new higher low. They definitely probably ready to sell. And what do I mean by that? Now, let me put that in practice as well. Program this thing in your head. In fact, know it. So now let's go to this part. The price of the market was coming in an uptrend, creating higher highs and higher lows. Now another thing is, if I don't want to say they are creating higher high and higher lows, I'll just say they are creating rallies. Understand? The price of, well, see, there are so many names for this thing, but then, and these are the things that actually make all these things look as if it's hard, but it's still the same thing. Because creating higher highs and higher lows, creating rallies, and definitely along some time, it's dropped like this. Came like this. Now, in this context now, let me explain what happened to you. Let me zoom out very well. So in this context now, you see the price of the market was creating higher low, higher high, higher low, higher high, higher low. Now the thing is, the new higher low and higher high, the new higher high must be higher than the was old higher high. The new this number 5 higher high must be higher than what this number 3 higher high. Do you understand? That is the new creations of higher highs and the new creations of higher low. You understand? Now this number 4 higher low is higher than this number 2 higher low. You understand? So those are meant to be how they're supposed to move. But now we just definitely saw that instead of it creating a new higher low around this particular number 4, you understand? It came down and broke below the last higher low. I know that it's a taboo. The number 4 is supposed to be higher than the number 1 here. You understand? But instead, it broke it down below this number 1. You understand? So in this case, if that kind of thing happen, you just draw a line like this. And when you draw a line, you call it what? CHOCH, also known as change of character. That is a multi-share level abomination has happened. CHOCH. Understand? We're just trying to tell you that the price of the market wants to what? Wants to change direction. So in this particular thing, it's just telling you that this is no more the higher high. You understand? You see the higher high. You see the higher high. But just give me warning that this can later be what? The lower high, whereas this will be what? The lower low. Now, in most time cases, you see the market after coming like this, it will now come like this. Now, the market went up again to form what? To form lower high. So that if this kind of thing happen most times, that is there's a break in the higher low. Make sure that there is a break, because now these people are making in such a way that there's not going to be a break. They will be equal. You don't think it was going to sell. Make sure at least, even though it's broke it with a small peep, it has broken it. You understand? And once it breaks the previous higher low, it's just trying to tell you that there wants to be a change in direction, that price of the market wants to continue a downtrend movement. Do you understand? So now, most cases now, it will come like this. Then after coming like that, to now continue selling. So now, if you can see, now, what happened here is now you see that this was supposed to go to be higher than this. This was supposed to be higher than this. But now, this is higher than it. So in this case, you see what happened here as SMS. which is also known as swing failure. Don't worry, you don't need to put all the names like I say in your head. Understand? Just understand the psychology. But when you are reading books and they are making use of those names, so you won't be confused. That's what I'm making. So at the end of the day, the name doesn't help anybody. It's on how you can actually understand what the market is telling. So what happened here is a swing failure, that is, it failed to create a new higher high higher than this one. So when that swing failure happens, definitely it has turned to what? A lower high, lower low, lower high, lower low, which means that it's already changed to downtrend. That's how powerful this validation of higher highs and higher low is. It's very, very underrated, and they won't tell you. You understand? So don't forget the first law. This is the first law. It broke the resistance, came back to the test. It broke the resistance, came back to the test. But at the same time, you can call it BOS. Because now the support and resistance are structure, market structure. You understand? So not just waste your time, you can call it BOS, break of structure, break of structure. If it breaks it bearishly, break of structure. If it breaks it bullishly, break of structure. You understand? You can just call it BOS, break of structure, break of structure, break of structure, break of structure. You can call it break of structure. What happened here to the break of structure? You understand what I'm saying? Break of structure, break of structure. After a break of structure, what happened is break of structure. After a break of structure, it go back to test that structure before it continue. You understand? You understand what I'm saying? If you look at, if you watch yesterday class, you understand what I'm saying. So that's that about lower highs, lower lows, variation of uptrend and downtrend. Now this leads us to a ranging market. Now ranging market is more or less like the price of the market just when the price of the market is oscillating within a price interval, more or less like the first law. Now the price of the market was oscillating within the price interval. You understand? Maybe this was 5 naira, this was 10 naira, or this is 5 naira, this is 10 naira, the middle, this is 15 naira. The price of the market is just oscillating within that 5 naira and 15 naira. You understand? This is more or less like the first law. This is a ranging market. The market is ranging in between that prices, 5 naira and 10 naira, so 5 naira and 15 naira. You understand? Easily you can come here, you sell, you buy here, you sell here, because you already know how the market is going to move. You understand? So that's ranging market. So when they are talking about chopping market will move like this. Not to that you will be like, what's this? So like they say for your level now, when you say chopping market, run away from that market. Do you understand? Run away from that market. When you say chopping market, you run away from that market. So that's that about that. See chopping market, you run away from the market. An example of a chopping market was what we saw in B25 the other time. But though I was able to figure it out because I'm more or less like in the advanced area. But when we get there, I'll teach you guys too as well. The Candlesticks is already selling. We are good at what we do. Very, very good. Candlesticks is already selling. Selling so hard. So now, okay, let me talk about the chopping market now. Now, when you say chopping market and you want to analyze the chopping market, in this case, you understand? Use the price delivery. What did I call it? Price delivery. That is, the market will start from consolidation, you understand? Then manipulation. Then from manipulation to what? Give you expansion. I don't need to cram this in my head because it's something that I see day to day that happens, you understand? So you don't need to cram it on your head. At least you can cram it for now at least, but along the time, you know what's actually happening. And after expansion, there will be a retracement or reversal, and there will be a reversal or retracement. These are the price delivery. You understand? So we use this price delivery. You understand? When we are dealing, okay, let us say I use this price delivery normally, and I'm dealing with the chopping market. Now, you can see the price of the market was consolidating from this box range. It was ranging from this box. You understand? What happened? You hit the first breakout, manipulation check, consolidation check, manipulation check. Now, what we're expecting was now was expansion, that is to break this box bearish, because this is the first breakout. Now, if you remember the third law, this was supposed to be a support, a resistance support zone, a stand zone. It broke the resistance zone with the first breakout. So definitely it's just trying to tell you that part of the market was going to sell bearishly. So now we have the consolidation check. These are the consolidation. The manipulation, here check, check. Expansion, expecting it, and it's already moving in expansion. So now we're expecting after the expansion, you will expect a reversal. That is, the reversal is now the law that says that after the breakout of each zone, it will retest. It will retrace to retest. That zone is broke. Before what? Before movement. Before it now went to go and meet another thing that will make it to change direction upward again. You understand? So those are the price delivery when you want to deal with a choppy market. Am I clear? Now, this is a secret that I've even shared to you, and I even like that I've shared after the basic class now. I like that fact. Fact that I've not been admitting people inside the class. Apple supports joint life. How come? So that's that about that. So what next, guys? So now let's talk about chart patterns. Now, these chart patterns, I won't stay long on it because obviously, we already discussed about something like this. We already discussed about something like this yesterday, which I was saying all these chart patterns were derived out from what? Derived out from the law of supply and demand, which is the first law, second law, third law, the fourth law, 4.1, 4.2. So what we're gonna do here now is we're gonna list the chart patterns we have now. I'm gonna talk on how they were being. We're gonna talk on how they were being derived out from the first law, second law, and third law, and probably fourth law. Now, name it. Let's start with flag. If you could remember what we drew into 24 hours here, that they called a channel. This one here now, you understand? It's called a flag. I can also call it a channel. You understand? Now, can you see this was derived out from the law of supply and demand? This trend line. But now they call it another context, they call it flag. Psychologically, they call it flag. You understand? So that's that about that. There's another thing they call pennant. They call it pennant, they call it triangle, but at the long run, triangle is still triangle. Depending on any type of triangle it is, it's still going to be triangle. We have the isosceles, we have the equilateral, you understand? Everything is triangle. As long as the price of the market is consolidating in a given pattern, what you are waiting for is what? The breakouts. And once you are waiting for the breakouts, you are either waiting for second law and third law, because obviously, as you can see in this flag normally, there's a first breakout. So this is giving higher things that second law can happen here and third law can happen here. So you have to be the one that has to be what? Very, very careful when you are dealing with these things. Understand? So now in this particular context, now they are given a triangle. The price of the market is actually oscillating in a triangle. You understand? Now, what you're expecting here is what? You're expecting a breakout. You understand? But don't forget that the price of the market too can still, in as much as it's still obeying the law of demand and supply. So definitely the market, you understand? Definitely the market now, you should still be expecting of like probably there are probably that there will be a first breakout as well. But now, how do I know if you want to break out? Because now these people will tell you elementary. They will tell you we have the continuational chart patterns and the reversal chart pattern. They are true, but you don't need that. What you need is, how do I know if it's going to be a continuational or reversal chart pattern? And what I mean by that is that they will tell you that the price of market enter and it's forming the shape of a triangle. Continuational means that it will continue in that direction it came inside that chart pattern. Why reversal is that it will break down. You understand? Bearishly, that is, it can come like this. When it comes like this, it's showing you like reversal because by that time, you understand, it was buying, but when it broke out, it was already selling. You understand? But continuational is that after what you want to do in the triangle, it will continue buying. But no, we already know that theoretical aspect, SARS and Ma. What we need now is what? How do we know that it's going to break it bearishly or bullishly that will warrant it to be a reversal or continuational chart pattern? All these ones they are staying SARS and Ma, we are not concerned. Now, let's go out to the price delivery. So that's how powerful everything arbitration is going to be. No, not you. Now let's go out to our price delivery here. Let's just take that what's actually happening here, because price market is oscillating in the chart pattern. Is what? It's consolidation. So next thing you'll be expecting and you'll be praying for is manipulation to what? Manipulation to happen. Now, if there's a manipulation like this, that is price of market broke this thing up like this and falling back inside the right, just know that it's going to what? It's going to sell because that's already made the first manipulation what? To buy. So definitely it's going to sell. So definitely it's going to be a what? A what? A reversal chart pattern. You understand? So after that, I can even sell immediately. I see that it's already a first breakout here. I can sell immediately. Then bam. Not that I will be waiting for long. Do not tell that, okay, wait, you should enter after a retest. No. I know they are trying to keep you safe, but no. You understand? And there's some cases that there might not be first a manipulation. You understand? There is just be expansion. You understand? But in most cases, wait for manipulation, then expansion. You know, we don't want the market. We can't predict for the market. You understand? So then after the retracement you follow, then the reversal. As simple as that. Very simple as that. Now we've talked about the flag, we've talked about the triangle, any kind of triangle, be it pennant, isosceles, obtuse, as long as price range is oscillating in between it. You understand? Now they will come again. You see that most of these things are like same thing. Now we have what we call the rising wedge and the falling wedge. You understand? This is more like the DNA of the triangle and the flag. You know, it looks like a flag. But in this time, we call this a rising flag and we have a falling flag. So the same way we have a rising wedge and a falling wedge. But in this case now, the difference between this flag and this wedge is that you will see that the mouth is being enclosed as it was going up. Like it started big, but the length, you also want to see like the space between here is closer. This space is wider. You understand? Just trying to tell you that the prices are going upward, but they are getting shrink as they go upward. So in such a way that any moment from when it gets here, there will be a breakout. Because do you understand? Well, at the long run, you are using the same context. You understand? You are either looking for a breakout or you are looking for a manipulation before a breakout. Same context. Now, let's go about that. When somehow they will even tell you they have triangle again, they have rectangle. They'll tell you that the price of the market is oscillating in a rectangular pattern. What you are still looking for is what? A breakout. So either you wait for a first breakout or you sometimes say, now let's go to the other ones that are a little bit different from these ones. Now that will lead us to head and shoulder. Just like I said, and I made an example very clear, loud and clear yesterday. That's how I made my example clear, very loud yesterday. So now, okay. So now, in this context now, the head and shoulder was formed from the formation of the third law. It was formed from the formation of the third law. I want to put something big. So for those that knows it and for those that does not even have an idea of what head and shoulder means, let me draw it. With label. As I'm drawing it, I hope you guys have your books there. At least if you are not writing down now, you come back later to come and write. Because all these things are necessary. Yeah, I'm doing that. I'm coding it. Okay. Okay. Sorry, guys. So, like I was saying, the head and shoulder was derived using this law of demand and supply. So let's say the law in which the head and shoulder now was derived from. I don't know if anybody have actually heard about Quasimodo pattern as well. It's more or less than similar to what's it called, head and shoulder, but I'll show you the difference. Now, in this case, listen to me now. This was supposed to be our support, right? Now, the price of market got to this particular level, and there was a change in direction. So definitely, there's a resistance around this price, right? And when it got to this two, another resistance, another support, right? Push it up and break what above this one. Now, according to that rule, the rule was supposed to be like this: that after a break of structure, it was just supposed to retest and continue like this, right? But instead, it's fall in back inside that price range of 1 and 2. So this was, is it the first law, second law, third law? Anybody, first law, second law, third law?
Third law.
That's the third law because it's broke. This is more like what a force breakout. Then after, they will not tell you that when this kind of thing happened in the head and shoulder, it's just trying to tell you that it's going to come like this. No, it's going to come like this, but normally you should know that when there's a force breakout, it's just trying to tell you that the price of the market will move in that what opposite direction the force breakout happened. As simple as that. So now imagine you using you have been taught chart pattern. Go yeah, I want to teach you chart pattern. When you see these things what's going to happen, and between you that you were sat down, explained the law, the three law, and how you can derive so many things from these three law. What do you think we know is best? Know that you were actually taught the fundamental. Do you understand? You know it's more than somebody that will just give you the formula, because to me, chart pattern is just a formula. And in a way, we are given a formula. The question might be changed anytime, and in such a way that you won't use the formula to solve that question again. But if you be sat down and we are being explained to how that formula was gotten, how that formula was being derived. If you see a question later in the future, you understand, you will be able to, even though, for instance, maybe we are given F equals to ma, that is force equals to mass times acceleration. That's they're actually calculating force. You understand? Now, if I'm given a question to solve in the examination and I was being given mass and acceleration to find force, it's still simple. But what if I was given a question in such a way that it was being logical and I was not given the parameter for mass or acceleration? I will have problem. But the person that actually got that F equals to ma, which the formula, can never have the problem because the person derived it himself. You understand? So in short, what I'm trying to say is that let us know these three laws. You understand? And anything we are doing in trading, any book we are reading in trading, always relate it to these laws. And when you're relating them to these laws, trust me, you understand this market better. That's why I don't have any issues when I'm reading a book. I don't have any issues. When I'm watching videos, I don't have any issues because I always relate what the person is saying with the law of demand and supply. And I'll be like, oh, that's why they are doing this related to this and this and this. Okay, it's as simple as that. Now, like I said, I don't think most of you have actually heard about the Quasimodo pattern. It's more or less like similar to the head and shoulder. So, sorry, the labeling of this head and shoulder, let me tell you now, they will call this the leg one. Or let me say, they call it, what is this? I think it's my left. The left leg, the left shoulder, the left neck. This is leg. Neck, this is the head. The right neck, the right shoulder, and the right leg. You understand? Now, not waste our time. I think they have this thing here. See. The left shoulder, you can see it's already labeled there. The neck, the head, the right neck, the right shoulder. Do you understand? Now, let me draw that Quasimodo pattern. Now, you guys tell me the difference between this Quasimodo pattern and just by normal sighting. Now, if you've been following me, you see that market is what chart patterns are more, they are good though, and they are just their easy way to make people know what's happening. You understand? But if you can actually just tell me what's actually happening here, you understand? Using, okay, let me make it simple. Using those validation of higher high and higher low, if you can tell me what's actually happening here, you are good to go. You can never have any issue when it comes to trading again. Now, before you tell me what's actually happening here, what's the difference between this head and shoulder and this Quasimodo pattern? It's called QM. Now, you can just see that the only difference that's actually happening here is that number 4 is below number 2. There's a reason for that. And now, I want you guys to answer that reason, but you don't know the reason. But now, let me tell you. Now, explain to me what's actually happening here using that validation of higher highs and higher lows. Digest it. Don't rush. Don't worry. I can give you 5 minutes for you to digest this thing. Anybody that wants to go first? Using words, because okay, obviously, to make this easier, these words, higher low, higher high, higher low, higher high. There's supposed to be a new higher high and higher low. But in short, it's broke. I've already answered the question. But can someone answer the question? I want to pause here, but can someone answer the question from here? I don't want the physical people. I want the people online.
There's a structural break.
Can you please explain that structural break? Because we have a lot of structural breaks. We have a break of structure here, a break of structure, a break of structure. Like, can you explain very well, sir?
What I understand is that there is a change in character there. Because number 4 is actually lower than number 2. It broke the previous low, which is number 2.
Yeah,
so number 4 broke the previous low.
Thank you, God bless you. Now, they call this Quasimodo pattern, but see how you interpreted it from the basics. You understand? So, you already even knowing the basics now. Now, okay, there's a CHOCH here, which is change of character. You understand? So we still talk about how to know when the number 5 is ready to sell, no? That's more like the intermediate and advanced class. You understand? But now see how you just explain, because you knew the knowledge. And the basic knowledge you knew now was what these people used to solve and to name it Quasimodo and call it a chart pattern. So definitely, if you see something tomorrow, you won't have any problem. You just solve it easily, say, without even knowing it's a chart pattern that has already been provided by someone else. You understand? I knew this thing before I know that. Okay, I was showing somebody something, and people were like, I know now, this Quasimodo pattern, like Quasimodo, I've heard about Quasimodo pattern before. You understand? So I didn't find it, but they already found it as a chart pattern. But I spotted it on my own, not even knowing that it already existed. Why? Just because with the law of demand and supply, and the law of demand, all this auction and everything. You understand? So that's that about that. Can you see this thing is easy? Just see, if you want to finish yourself, like you want to really finish yourself, that trading, I want to finish you. Like I want to murder you. I want you to kneel before. Though you can't actually kneel. Market can't kneel before you. You always be the one that will kneel the market. But like for the paparazzi, not the market to kneel before you. The assignment I gave you guys, that you guys just go sketch the market using first law, second law, and third law, using both the validation of higher, the uptrend or downtrend. Just sketch and give me the reply, and just make sure that everything you are sketching obeys the third law. You understand? And obeys the validation of higher highs, higher lows, lower highs, lower lows, cow, change of characters, or any other chart patterns. You understand? So now you see, I like the way that we are going slow. Because to now, like this, next time we'll be meeting, next week. We won't have any issue. This whole thing I'm teaching you something like I practically used like how many years? And now we're just using like 4 days. And I hope you guys are getting it. So let's just go. You can actually read about other chart patterns and relate them towards the law of demand and supply. That's another assignment. Do you understand? So now let's go to Let's go to where should we go to? Let's go to candlesticks. Japanese was candlesticks. Now, yesterday we talked about these candlesticks, right? We talked about the reason why we are using these candlesticks compared to other graphical representations like bar charts, line charts, halo candle. Understand? We talked about that. We'll give the labeling. Understand? So now we'd like to talk about the candlesticks pattern. And what do I mean by the candlesticks pattern? These candlestick pattern are divided into two. Well, let me say they are divided into two here actually. We have the continuational candlestick pattern and reversal candlestick pattern.
And the reversal, okay.
You understand? Now, let me go back to explain, to practicalize this thing. Now, I was asking a question yesterday. And the question was, now, using the third law as an example. Using the third law as an example. Where can I do it? Okay. Yeah, I've seen it. Come here, man. Come on, this V25 is selling like mad. Selling like, if you can see now, let's go back to the V25, 1 hour. You see that the expansion has already occurred. You see? I like the fact that we are going live and everything is happening. Can you see? Consolidation, manipulation, expansion that has broke what? That has broke that, that pricing and it's coming down. And after it coming down, it will come for a retest for selling. You understand? Now, practically, I can even try to support my analysis by drawing a what? By drawing like a channel. Now, my channel is speaking two things. Like I said, don't first draw. 1, 2. By drawing a trend rather. And now, by drawing a trend line now, okay, let me make this one as well. So I'm not forcing it. This is already picked too. So can you see this one is wider, this one is getting enclosed. So this is like more like a rising wedge. You understand? Now, can you see it broke out? Like I said, in all these chart patterns, we are trading what? Breakout, breakout, like all these enclosed chart pattern, like triangle, rectangle. You understand? Now, once there's a breakout, don't forget this is more or less like a support. It has to what? Come back later, come and retest this line. You understand? So which means that sooner or later, for me, I'm using this place. I'm thinking of this place as where the market will use for it comes to support. I'm thinking like market will now come here. To come, why is it not right? Okay, to come here, then come here for a retest. Where start selling. Do you understand? Do you understand? Well, basically, you know, you've already used like 5 knowledge to finish the market. You started using, you've used the price delivery knowledge, and now you're using normal price action, drawing all these chart patterns and stuff. You understand? And at the same time, let me now tell you again now. This is what? This is what? Higher high, higher low, higher high, higher low, higher high. This was our last higher low now. And you see the market already is higher low.
Yeah. That's wonderful.
Let me use normal trend line. They might be equal to what it's like the last higher low. Now it's going to break it down now. Probably use this other block that will push it up to create a what? To create a lower high. Yeah, now. After the creation of the lower high, it will come back to create a what? A lower low that will be lower than the previous lower low. Before it comes back again and start moving like that. Very simple. Kill it. Do you understand? So I was trying to talk about what were we trying to talk about before we diverted into 1 hour time frame for B25. Um, sure, we're talking about, man. Oh, let's talk about something. Oh,
Candlestick.
yeah, candlestick.
Oh,
Reversal candlesticks. Now, in this
reversal
particular context, now it was easier for me to know that, like I said they are divided into two. Let me type it out. We have the
continuation
what?
reversal.
Reversal
Oh,
and the continuation.
continuation.
And now the continuation is not really something hard like that. The continuation is more or less like three. The one I know actually, the continuation is like just three pattern candlestick. Let me shorten it. STK, which is called the three white soldier. Three white soldier. You understand? White out of reversal. You understand? We have 1, 2, 3 candlestick pattern. At least we have the one candlestick pattern, the two candlestick pattern, and the three candlestick pattern. Now, I will explain everything to you now in such a way that you yourself, you can now say that, you want to develop your own 4 candlestick pattern later. You understand? As long as the candlestick is popular and is working, you can name it after yourself. If your name is Idris, you can be then Idri. You can short it in such a way this it will be like a two word. Idri candlestick, Idri reversal candlestick pattern. And before you know it, you will just be writing story about it. Idri is a Nigerian man that started his trading career and fun, you understand? But now, most people would have actually done this, but most people, all those then, people are after history. They want to create history. But now, a lot of us say we don't want to create history. All we are just after is that money. You understand? So that's why I think they've not added to this kind of candlesticks. No, probably there are people already out there that are writing books about other candlesticks, but they've not yet blue. And God will help them to blue. Like for instance, like I said, I propounded the first law, second law, and third law from my own imagination, thinking of what I've seen. And practically that was, I think, what was actually happening. But I've never read a book that says about it. And probably if I start writing a book about it now, you understand? It might not go far, but it will go far in Jesus' name. You understand? Which cannot make you like, okay, the first law propounded by Alex, the second law propounded by Alex, the third law propounded by Alex. You understand what I'm trying to say? So, but me, I'm going to teach you such a way that you understand this thing like ABC. But what I will say is that the fact that I say you understand it ABC doesn't mean that you'll be making every time to know on the market. That I know English does not mean that I cannot still make mistakes. You understand? But at least when you hear me speak, you know that, oh, this guy knows the English, but it's not just perfect. Like, you're sometimes like, it's not just like perfect, but he knows English. So that's how it's going to be. You understand? That, oh, they know how to trade, they are being profitable. Like, your profit will maximize while your losses will be minimized. You understand? That will be the motto for AFX now. Maximizing your profits to minimize your loss. Glory. So now I was talking about the candlesticks. I said on the reversal we have the one candlestick pattern, two candlestick pattern, three candlestick pattern. So let's start with the constitutional candlesticks now. What do I mean by the constitutional candlesticks now? Now, in this particular context now, you all should be expecting that probably the price of the market was supposed to respect this trend line and they was also supposed to go up, right? But now what actually happened here was that it broke it with the three white soldiers. And what I mean by three white soldiers was like it broke it with a three strong bearish candlestick. Can you see? There was nothing even like bluish among these candlesticks. So these are the example of three white soldiers. 1, 2, 3. You understand? And broke it down with a real body. You understand? When you're trading a breakout, make sure that the hour of that candlestick ends with a real body outside that channel. You understand? That will enable you to know that it ended with a real decision. Because if you don't allow it to end with a real body outside, it can just be a week. And week are what? Week are manipulations. Like what I mean by week? Like all these tails. You understand? It might just come down. Then before the hours of candlestick ended, it might just going back. Hence creating a what? Creating a week. You understand what I'm saying? And week most times. You know, normally we'll switch to a 2 hours or 4 hours time frame. This was a week. You understand? Now, this is an example of a reversal candlestick. But we'll still come back and talk about them. Understand? But now this is what a reversal, a continuational candlestick with 3 white soldiers. So when you see a 3 white soldiers normally now that you already know that the price of the market wants to sell. You understand? Yeah, the 3 white soldiers. You understand? Okay. But the reversal, when you spot the reversal around the zone, it's just trying to tell you that the price of the market wants to respect that zone. You understand? Upward. And now let's now go to the reversal candlestick. Now I'll just be picking one examples of the reversal candlesticks because at the end of the day, the least thing that you want to look at are candlesticks. Because easily you can spot reversal candlesticks anywhere, and there won't be a change. Do you understand? There won't be. For instance, now this is a doji. After seeing a doji, the market was supposed to buy now. It didn't buy. It's continuing selling. Understand? So now I tell people the last thing you want to look at is the reversal candlesticks or the candlesticks pattern. The first thing you want to know is what? Know the movement. And how can you know the movement? Using the demand and supply laws and using the validation of uptrend and downtrend. Understand the movement. Then after, just to ask your confirmation, maybe it's ready to sell or ready to buy, then you might now use candlesticks and other things we're still going to discuss about in our next class. Are you getting me? But for now, this is the 3 white soldiers. Definitely, we already know there will be a break because it means that psychologically, the pressures of the seller were too much. That though that line couldn't comprehend it, couldn't hold it. It's more or less like they use clay wall to defend probably when the war is coming. Obviously, sooner or later they will break it. Compared to someone using a concrete wall. Do you understand what I'm saying? So when you see a number of soldiers that have come, like thousands of millions of soldiers, definitely you that use like clay wall to build your kingdom, you know that they will penetrate it. You understand? But when you are seeing one man soldier, just wants to be like, but before you even get to that was archers, they will have shot arrows to the man. You understand what I'm saying? So that's like the concept of what this thing looks like. So now going to the reversal candlestick, we have the one candlestick pattern. An example of the one candlestick pattern is, you know what I want to do now is, I want to go to Google. That will be showing you the candlesticks pattern. In one pattern, images, please. Thank God for that. Let me try and share you that. So now, can you see my screen, guys? Hey, my system is not right. 8%. Can you see my screen? Can you see my screen? Oh,
Yes, we can.
Yes, we can
I
see.
can hear.
okay. I think I'll have to handle this the class very soon because I don't know if my system is not charged. I'm on 12%. How come? Okay, now this is an example of a one candlestick pattern. Now we have the no. Marubozu is a 2 candlestick pattern. Doji, so let's grab this first one. Or is it Maruboza? Why are they giving this? Okay, don't worry, leave this one. Now, probably it was this person that invested Marubozu. Because what I know is Maruboza. I use Maruboza. And the Maruboza is more like a tweezer. But at the long run, you putting the name in your head, you understand? It does not really matter. I will explain the psychology meaning of all these candlesticks to you. And the additions of this candlestick to show you why it is two pattern, why it's three pattern. They will not tell you all these things, but me, I will tell you the dark areas and how they were being what derived. I hope my system permits us. I don't know why it's doing really like this. So, like I was saying, come on. Oh, this is funny. It's not charging. There should be a green light, a yellow light indicator. Yeah. Not charging. Maybe it's that. Hey. Okay, let me continue. You just put a stop to sorry guys. I don't even think it's how did the charger? Hey, good charger. Voila. So that was not our time. Okay, let me just quickly round up. Now, these models like these are the one candlestick pattern, right? We have the doji, shooting star, spinning top. But under this doji now, we have different type of doji. We have the dragonfly doji, which here is it. You understand? We have the dragonfly doji, we have the gravestone doji, they will tell you different kind of doji. But what really matters most is that, do you know yesterday when we were talking about this labeling of the candlestick, we said we are using them because they offer so many informations, you understand? And we talked about real body, opening positions, and closing positions. If you forgot, you can just relate back, you understand, to yesterday class. You understand now? So now, if you can see, this was the opening position, this was the closing position. Psychologically, what this is just trying to tell you that the rate at which the buyers and the sellers were around that particular time frame of the candlestick, you understand? They were struggling and they were fighting each other. They were fighting each other. You understand? And at the end of that candlestick hour, you understand? The opening position and closing position were together, which means indecision. You understand? It's more as if like maybe how will I say this? I'm looking for a better illustration now to be fast. How will I say this? I can't find a better illustration now. And that's because I actually want to round up quickly. We can't take our time. I'm already on 11%. So now, what it does mean like indecision, that is the rate at which, like for instance now, the buyers were dragging, the sellers were dragging, and at the end of the day, the position and the opening and closing were closer to each other. You understand? It's just trying to tell that indecision in the market. Now, in this particular context now, you will see this was a bearish candlestick. You understand? The formation of the wick to this point means that the price of the market has actually got to this point before. You understand? But it was being pushed down by what? By the sellers. You understand? This is actually a wrong candlestick. It was supposed to be correct. It was also have a wick. Because if this is going to be the opening position and closing position, this was supposed to be a green candlestick. You understand? So let us. It's going to be red. And this will be open position, and this will be the closed position. Oh wait, okay, yeah, I think it's correct. It's correct. Sorry, it's correct. This is the open position. You understand? It means that the market already bought to this particular point, and the sellers pushed it down, even below the open position and closed there. So definitely just telling you that sellers are in power. You understand? Because like I push something to point A, you understand? And immediately the sellers push from that point A to minus point B. You understand what I'm saying? At the long run, it's just telling that around that particular hour and the formation and the completion of that hour or that time frame of the candlestick, The sellers are what? The sellers are in action. And this was just trying to tell you that definitely the price of the market wants to what? Want to start selling. You understand? Because when you see a shooting star on a bluish market, on a downtrend market now, you'll be like, we saw a shooting star on a downtrend market. It's still not, it doesn't have any, because now, but people really make mistake on that. When you see a shooting star, like a market is selling now, and actually see a shooting star, it's just adding to the downtrend. Because the market is selling, it's just trying to tell you that the price of the market wanted to buy, but they still push it down. So definitely don't expect the reversal around that particular time. But when you see a market buying and you see a shooting star, it's trying to tell you that the sellers pushed the market down. I don't know if you understand what I'm trying to say. There are two different things. You don't just use candlesticks anyhow. Don't worry, guys. I know I should dive into very well, but I'm still trying to figure out the charger distance. Yeah? You understand? But at the same time, let me continue because the time waits for no man. It goes to use 2 hours. So we have 15 minutes. Oh wait, let me clean this now. You understand? Now, this is an example of what spinning top again. Now, to me now, this is still more like doji, guys, because the opening and closing positions are closer towards each other. So don't be deceived. There are so many other I think so many other one candlestick. Okay, we have the armor. You understand? We have the inverted armor, we have armor, we have the pin bar. This shooting star looks like pin bar as well, and it looks like armor. At the end of the day, the shooting star, pin bar, and the armor are sharing the same psychological meaning. You understand? Unlike the doji that is just telling that indecision. And now, if the doji is telling that there's indecision in the market, well, definitely just telling that anything can happen around that time. So all these reversal candlesticks are things that you don't just use them to predict. You use them in the zone. You understand? You use them in the zone. That is when there's a resistance. Let's go back to we can't finish the second part. Okay, now, but wait, let's go to 2 patterns now, 2 pattern candlesticks. You know what happen now is, what will happen now is, I'll drop a book now. You know what the book is, Candlestick Bible. I know most of you have actually come across this. You understand? Most of you have come across this. I will tell you the page where you start reading the candlestick, because obviously you guys have enough time to do this. We are not meeting till next week end again. You guys have enough time to do this. Pardon me, pardon my sister. You know what's wrong with it. I'm still trying. Along the wrong way, it comes up now. Continue. I'll tell you, promise in the next class, I will finish it. But before that, you understand? Please just make sure you yourself read that Candlesticks Bible. I will drop the PDF now. You understand? Like, sorry, after the class, immediately after the class, I'll drop the PDF. So you read about the candlesticks, and thank God for that man that wrote the Candlestick Bible. He explained it very, 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 very well. That's one of my best books. You understand? So that's that about that. So what I'm just trying to say is when you say the matter candlestick, it's just trying to tell you that there are likely changes. The changes, huh? So now let's quickly make use of some examples. Like, you know, I'm a man of examples. So now, like I said, it's the 3 white soldiers. You understand? But around this place now, it is what's it called? Piercing or the change in direction. Can you see that spinning top that I said is spinning top? Like that I said those words. It's called a spinning top. Can you see after this function of spinning top along that zone does change in direction? This is another word. This is another what's it called? What's it called? Another, because now when I was talking about the addition the other time, if I add these 2 candlesticks together, I'll be having what? I'll be having a hammer. I'll tell you on how to add that in the next class. Or no, not be the next class. I'll just during the week I'll do that. We'll organize just a class for that during the week. Just really we'll just organize maybe on Wednesday. Organize a class for this, or probably tomorrow. I'll let you guys know. If I add these two candlesticks together now, I'll be getting hammer. And hammer is what? A reversal candlestick. Hope the of you that enter this thing and stay in profit. Someone just entered my game and said he took it. Imagine. People are taking advantages of everything. You say don't sleep there, you know. So I'm praying that I didn't take it, but somebody's taking it. So that will be that about that. About 7%, and I have to end the meeting. It's not good for the laptop to die when you need the meeting, so that I can get the recorded file. So that will be that for now. So please, any question? Let me check the chat box. Okay. Any question? Mr. Ari, Mr. Jimon, Mrs. Rosina. Peculiar.
Good evening, sir.
Yeah, any question?
Nothing from me. Thank you so much for the lesson. I appreciate it. God bless you, sir.
All right. Mr. Danny Nayeni, Mr. Ogarakul. Okay, in the absence of no question, I will take it that.
Okay, when would the next class be? That would be Friday, right?
The next class, no, live trading is always on Friday. We'll go live and analyze together. They will take the signal. So the next class is going to be on Saturday, and the next will be on Sunday. But like I said, I will find a way. I'll work around my schedules and find a way in which we will finish this class about the candlestick, the reversal candlesticks, and the additions of the candlestick and the outcome of how they are now making this 2-pattern, 3-pattern, the reason, the psychology behind everything. That's what I want to explain. And I will make sure I explain them what during the week. Probably I'm having an event with this same Miss Peculiar here. Mrs. Peculiar here. She's actually a well-known female trader in South Africa. So I think she's actually like inviting me for a class, for a session with our students soon. So probably if that's going to be possible, Miss Peculiar, I don't if you won't mind me sharing the link to my group so that all of them can actually just gain it up together.
I don't mind, sir.
Okay, no problem. So she has given us the floor. So when she get back to me on when she wants us to have the class, I will get back to everyone on the platform as well. So we'll have a class together. So thank you very much, guys.
All right.
Thank you.
Thank you. God bless you.
Yeah, amen. And you too. You want to ask a question? Okay, in the absence, I'll be leaving the class now. Thank you very much, guys. God bless.